Hi, everyone. Today, let's talk about the big update to Fundrise. The focus of this video will be introducing the Fundrise Real Estate Interval Fund, which provides a lot of characteristics that have not been the case for Fundrise in the past. Then I will talk about the fund merger that took place on the 1st of December and some of my thoughts on the direction of Fundrise going forward. Full disclosure, I am part owner of Fundrise. I did purchase shares during an internal IPO, and my position is represented here. If you like investing and making money, definitely like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. So the Fundrise Real Estate Interval Fund was announced on December 29th, and they are promising more diversification, lower overall costs, and most importantly to most investors on Fundrise, in my opinion, is improved access to liquidity. They say they are excited to announce this new flagship fund, which will power the core of investment portfolios going forward. They say that they've been constantly working to improve the investment portfolio as well as investor experience to make it simpler and more efficient. This drove them to create the three different portfolio options, which is the income fund, the balanced fund, or the long-term growth funds to choose from. That way you don't have to choose individual e-REITs, which you can do, but I don't think most people do that. And personally, I'm in the long-term growth fund because that aligns with my investment goals. They also say they are different from other investment tools, which ultimately invest in similar underlying products like the S&P 500. But with Fundrise, you are investing in assets that you cannot get other places because they are part of the Fundrise specific portfolio, which is one of the great appeals of Fundrise itself. They mention here that Fundrise's e-REITs are not continuously traded like a public REIT, but they offer quarterly liquidity options, which allow you to withdraw money. However, it does operate like a REIT for tax purposes. They say this is the first publicly offered interval fund focused specifically on real estate investing that is available online and not sold through intermediary investing brokers. And this is part of the trend with Fundrise. They like to provide investing opportunities to individual investors that were previously only available to either hedge funds or larger investing brokers that manage much larger portfolios, but now they are offering these to individual investors like you and me. So what makes this fund different than any of the other funds that they have previously offered? Well, first off, it's bigger. It has a $1 billion initial offering with no cap, which means it will be able to hold more assets than any of the previous funds, which will allow investors to have more diversification with one single investment. The biggest piece that I mentioned previously is the liquidity. The fund will offer quarterly liquidity in the form of quarterly repurchasing offers with zero penalties. So this is extremely different from Fundrise initially. If you wanted to withdraw money from your previous Fundrise investments, you would be subject to percentage-based penalties with Fundrise previously, but now they are offering zero penalties for liquidating shares on a quarterly basis. This massively improves the liquidity situation, and it should be interesting to see if they can maintain this long term. Real estate does tend to be a longer term investment, and I suspect that most people will keep their money in this fund and not trade it quarter to quarter. But the fact that they do need to have money on hand to purchase assets and do construction and invest in debt for remodels and other real estate based investments does mean that they have to have at least some liquidity locked in for investments. So it should be interesting to see exactly how they do this or if it's sustainable, but I do like the idea. They also mentioned that it will be priced daily as opposed to the quarterly or semi-annual basis, which current funds have. I do notice that my equity investments are reassessed quarterly, so it's hard to tell exactly how it's growing or if there's any downturns during situations like the Rona, where you did see a little bit of a drop in some asset values with Fundrise. This makes sense because they are offering liquidity on a quarterly basis, so they do want to give you a better picture of what it would be worth at the end of the quarter if you did want to liquefy your investments. They also are advertising a lower fee structure at 0.85%, as well as quarterly distributions for things like dividends, which will be reinvested in your portfolio unless you choose to withdraw them. They also mention regular asset updates, which they were already doing with their current funds. And then hassle-free reporting. They will report your taxes with a 1099 div, which does make it easier for most investors. Previously, they had been reporting on K1s, which I do receive for my Fundrise portfolio, which is just kind of annoying It's not impossible to deal with, but for most investors, a 1099 div does make their taxes a little bit easier. And they finish out here by saying this is just an improvement to the investment portfolios that they were already providing, but they're doing it in a more efficient way than they were doing it before. And then scrolling down here, they do have some frequently asked questions. And this article will be linked in the description if you do have any questions about this new change to Fundrise. Moving on to the merger, which took place on December 1st. You can see here they are merging 3 separate funds to create greater efficiencies, reduce overall operating costs, and increase diversification, ultimately producing stronger potential for returns for investors. And this is why I wanted to mention this merger. I've talked about it a little bit briefly in some of my Money Moves videos, but this is a trend with Fundrise where they are taking some of their existing products and creating more efficient and more diverse products for investors. And for me, as a person who owns stock in Fundrise, this is what I like to see. The company is constantly innovating their products, constantly trying to improve their overall investor offerings. And now with the addition of liquidity in their interval fund, they become a more and more competitive option for investors. They mentioned the new Fundrise eFund, which was the result of the Washington, D.C. eFund, Los Angeles eFund, and national eFunds, now contains 75 single-family homes, 88 potential development infill lots, and some cash representing a total value of $83 million. They say having a larger portfolio in a single fund will continue to allow them to scale the fund and increase diversification, as well as driving down their fund level operating costs, which will ultimately result in increased returns to investors. They show the net asset value per share here for each of the funds and how they mostly grew over the past couple of months, except for the Washington, D.C. eFund, which did go down. And they combined them into the Fundrise eFund with a share value of $11.44. Then they talk about each of the different funds. They say Los Angeles did pretty well, where San Francisco did struggle a little bit, and New York did well also. And then they briefly mentioned that weaker sales in the Washington, D.C. fund caused the overall asset value to go down. And they also mention here that all asset management and advisory fees were waived for all 3 funds. They don't really mention a time frame here, so I'm not sure exactly how that works, but I'm glad that they are at least taking into account that investors may have chosen these funds specifically and that they don't want to charge them advisory fees because they have chosen to combine them into one total fund. Overall, they expect the merger will reduce overall volatility, as the Washington, D.C. fund did struggle a little bit, but it will still generate better overall returns and better diversification for investors. If you're curious what an interval fund is, it's just a fund that is not publicly traded at all times, and they offer periods where you can repurchase shares specified by the investment company. And for Fundrise, they are offering this quarterly. If you have questions on this, it will be linked in the description. But it's pretty straightforward. It just means that the company is choosing to control the funds at specified periods instead of allowing it to be publicly traded the way that stocks and options are traded on the open market. Moving on to what I think is the future for Fundrise. You can see here they're focusing on Investing 101, which is bringing real estate to the smallest of retail investors, allowing them to invest in ways that they previously could not do, at least in a way that wasn't nearly as transparent. There are public REITs that are available, but you don't see the individual projects that they own. They give you large figures like they own 5,000 structures in the case of Realty Income, but you don't know exactly what they are, what the address is. When Fundrise tells you this is a project, they give you the address, the region, and all of the details that go into why they chose that specific project. And this really appeals to the newest age of investors where they want to know exactly where their money is and what it's doing. Real estate in and of itself is a very hot market right now. I think this is partially due to the fact that there's not a lot of inventory on the market due to the Rona, but real estate has traditionally been a safe haven, similarly to gold, but far less liquid. So if Fundrise is going to provide a semi-liquid fund that allows investors of all sizes to invest in real estate, perhaps Fundrise can benefit from this Rona situation after all. Also, they are providing advanced investing to the largest of investors, all the way up to their premium service with a minimum account value of $100,000. And these are fully illiquid investments to where that money is going to stay in for the duration of that project. So they provide investments from the smallest to the largest of investors, and it seems like they continue to improve on their products. And as an owner of this company, I'm happy to see the progress that they're making in their current investments, as well as the improvements on the platform as a whole. If you're curious on how to own some stock in Fundrise, you have to be an investor with them. And when they decide to do an internal public offering, they will allow you to invest a percentage of your investment portfolio into stock. So if you've invested $5,000 and they decide to offer a 20% IPO, they will allow you to invest an additional $1,000 in stock at whatever price that they've specified. They don't give a lot of warning on when they do this, and they haven't announced when the next internal public offering will be. But if you do want to take part in that, you do need to be an investor with them first. Of course, if you are not a Fundrise investor yet, and you want to be one, there is a link in the description that will get you your first 90 days of advisory fees waived once you fund your account. My next video on Fundrise will be my year in review, so definitely like and subscribe if you want to keep up with my Fundrise portfolio, or if you got any value out of this video. Of course, this is not financial advice. This is all for entertainment purposes. Definitely like and subscribe before you go, and have a great day.